2015 was a big year for the FASB. We made some significant progress on our key projects, including our leasing standard, our financial instruments related projects, including classification and measurement, impairment and hedging, our disclosure framework project, as well as we continued the momentum on our revenue recognition transition resource group. And in 2016, we're going to continue that momentum, both in terms of making targeted improvements to our standards, as well as educational initiatives we have underway for those standards we're about to finalize.
So on the business combinations projects, there's several elements to it, and to a degree we're addressing those in phases. So first and foremost is the definition of a business. The definition of a business affects many areas of current GAAP, and that definition sometimes is applied very broadly. Another part of the project has to do with goodwill. And what we're trying to do is to simplify and reduce some of the complexity around the testing for impairment. And finally, we're going to look at the subsequent accounting for goodwill. We refer to that as day two, whether there should be an amortization or impairment testing. So on the definition of a business, we published the proposed amendments to the definition back in November. The comment period expires during January, and then we'll review the comments and go from there. On the impairment testing for goodwill, the board has made most of the key decisions. We'll finalize that soon.
In the leases project, the FASB is trying to increase the transparency and comparability of a company's financing arrangements by recognizing lease assets and lease liabilities on the balance sheet. This project was a convergence initiative with the IASB, where the FASB worked through a number of different models to recognize those lease assets and lease liabilities in the most cost-efficient manner. The board has finalized its redeliberations and is looking to issue a final standard within the first quarter of this year.
On the revenue project, the FASB and the IASB recognized that each of their sets of guidance were in need of improvement, and so the boards decided to work together to improve comparability in organizations' top line, their revenue, from one organization to the next, regardless of the industry that the organization happens to operate in or its geographical location. For a public company, the effective date of the new revenue standard is 2018, but for a private company and for many not-for-profit organizations, the effective date is 2019. All organizations, though, are permitted to adopt the standard early as of 2017. And so one of the activities that the board is performing to closely monitor implementation and to be responsive to stakeholder needs was to form the Transition Resource Group. That group has been effective in quickly informing the board about implementation questions that have arisen, and it's also helped to educate stakeholders broadly about the requirements of the new revenue recognition standard. Over the coming year, you can expect to see a number of other transition group meetings where we'll help to continue that educational mission of the TRG.
In the credit losses project, the FASB is trying to improve upon the reporting of credit losses by incorporating more forward-looking information and expectations of what a company actually expects to collect. The credit crisis was evidence that the current GAAP model measures credit losses too late. The FASB understands that in the lending process, a company thinks about forward-looking information and expectations of collection. Therefore, the board believes those same assumptions should be reflected in the financial reporting process. The board is in the final process of redeliberations and expects to issue a final standard within the first half of this year.
Well, the aim of the Government Assistance Project is to provide better information to users of financial statements about assistance received by business entities, whether it be in the form of grants, loan guarantees, low-interest loans, tax abatements, or so forth. Now, at this stage of the project, we're focusing on disclosures, and we've proposed disclosures that get to the nature of the assistance, how it's currently being accounted for by the business, as well as the impact of the assistance on the business's financial statements. We expect to issue a final standard in this area by about the middle of 2016.
So on the insurance project, we're trying to improve the accounting and reporting for long-duration insurance contracts. When we say long duration, we're principally talking about life insurance and annuity products. The way we're approaching it is that we are making certain selected, targeted improvements to current guidance after working extensively with users and preparers of financial statements to identify the best opportunities for improvement. The board has completed its deliberations and made tentative decisions in the areas of estimating cash flows, accounting for guarantee of market performance, and deferred acquisition costs. So to finish this phase of the project, we still have to talk about disclosures in the notes and how we would transition to the new accounting. And I would expect that we would issue a proposed accounting standards update around mid-year of 2016.
In the hedging project, the FASB is looking to make targeted changes to better reflect the economics of a company's risk management activities. In addition, the board is trying to make the model more simple to apply for companies in their financial statements. The board is in the process of finalizing its deliberations in the first quarter of this year and issue a proposed ASU, what we call an exposure draft, in the first half of this year.
The Simplification Initiative objective is to reduce cost and complexity in financial reporting while maintaining or improving the quality of information that's reported to investors. The board has made a lot of progress on the Simplification Initiative over the past year. We've completed about 10 projects and we have a number of projects in process. One of the key projects that we're currently working on is making simplifications to accounting for stock comp paid to employees. That's a project that we've worked on closely with the Private Company Council, and we hope that it's completed soon. And so I would encourage stakeholders to submit additional ideas that they have for simplification in GAAP.
So for not-for-profit organizations, our key project remains our not-for-profit financial statement project. Following the exposure of our 2015 proposals, we've decided to phase the project into two phases. In the first phase of the project, we will be looking at much of what was contained in the proposal, with a notable exception of most of the issues having to do with operating measures and related cash flow reclassifications. We expect to complete the first phase by about the middle of the year and issue a final accounting standards update on that.
The goal of the Disclosure Framework project is to improve the effectiveness of disclosures in notes to financial statements. So the project is split into two parts. First, we have the Disclosure Framework, which is designed to help the board make consistent decisions about disclosures. That Disclosure Framework has since been used to review various disclosures within GAAP. And then second, we have a clarification of the concept of materiality to help companies, to help entities make decisions about what information is most useful to investors. So this past September, we published the proposed clarification of the concept of materiality. That would be the standard that businesses, not-for-profit organizations, and others would use to determine what information is useful and should be disclosed.
Well, in 2016, the PCC will have a new chair, Candy Wright, and 3 new members, but it will be continuing its work on behalf of the private company sector, both in terms of looking at areas of existing GAAP, as well as advising on the FASB's active agenda projects. In the look-back area, the key area of focus will be on the application of variable interest entity guidance to arrangements of private companies under common control beyond what was already covered in the PCC alternative on leasing arrangements that was issued back in 2014. In the area of the FASB's active agenda projects, the PCC will have a lot to advise them on. There are all sorts of projects that aim to right-size GAAP for all organizations and companies that are encompassed in the FASB Simplification Initiative and Disclosure Framework project.
We're very excited about 2016, and we hope our stakeholders will continue to actively participate in our process through our webcasts, through our comment letter process, through our town hall meetings. So we hope that you'll visit our website and participate in our process.